Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Let me show you what's going on the markets from both fundamental and technical point of view. During this webinar, which will last 30 minutes, we'll try to look for decent trading occasions on the market. I will try to look for good trading setups, and we will discuss what's going on the markets from the fundamental and technical point of view. So let's start. Let's start with the euro dollar, and once we will have this euro dollar, I will explain you what happened yesterday and what happened today from the fundamental point of view. Well, yesterday the most important event were FOMC minutes. Actually, those minutes were not so important as the previous ones, for example. So they were not so anticipated as usually, but actually it was the only important event on Wednesday. So our attention was shifted towards that. On the hourly chart, on the euro dollar, you can see an upswing when that minutes were released. And actually, yes, those minutes were perceived as dovish. So American dollar was weaker. But at the same time, as I said, that movement was very, very small actually. So that event, FOMC minutes, was not so important as usual, and most of that upswing caused by FOMC is already gone. It's already gone with today's downswing on euro dollar. Let me show you the calendar. And on calendar, maybe this week, but we will change the filters only for the most important data. Yes, on Wednesday you can see FOMC minutes was the only important event. About FOMC, we will continue with the calendar, but let me tell you about the FOMC first to finish with that. The minutes noted that many participants expressed concerns that the low inflation this year might reflect not only transitory factors, and that several policymakers said their decision on whether to raise rates this year would depend on whether the economic data in the coming months increased their confidence. It was noted that some patience in removing policy accommodation while assessing trends in inflation was warranted. Some participants were more worried about the upside risk to inflation arising from a labor market that had already reached full employment and was projected to tighten further. Also, many participants continued to believe that labor market pressure would show through to higher inflation eventually. That altogether was perceived as dovish. But again, it was not this movement was not so strong because not many people pay attention to FOMC minutes. They were not so important as usual. Today we got a very interesting event for British pound. We had Mr. Barnier, who is a negotiator from European Union in Brexit negotiations. He said that this week Brexit talks were constructive, but no big steps forward were made. He also said that Brexit talks have reached deadlock. He said also that decisive progress is possible in next 2 months. All that was perceived as very negative for British pound, and actually British pound is currently the biggest loser on the market. It's dropping like a rock quite heavily. Apart from that, pack of data from Australia, better than expected. Industrial production from Eurozone, much better than expected, but it fails to help euro dollar, as you could see. In 2.5 hours, we will have a speech from Mario Draghi and other ECB members after that. On Friday, get ready for Chinese data and American data, CPI retail sales. So tomorrow, very important day for American dollar. Actually, with that data from retail sales and CPI, we should get bigger movements than after FOMC, to be honest with you. So now let's come back to the charts and see how the situation looks like from the technical point of view. Euro dollar, this triple bottom formation worked. I'm happy that we spotted that and we warned you about this triple bottom formation, so I hope that some of you were able to make profits on that. We attacked first resistance with success, second one success, and third one is this upper line of the flag formation, which is now triggering a correction. The first potential target for this correction, actually, okay, let's be more precise. Yes, first potential target is the yellow area. So we should see the price declining here. I'll say 25 pips lower. To be precise, yes. The next one is the green area, but with this sentiment, I think that the bounce should happen here, somewhere around here. The sentiment is positive. I can see an upswing here. I can see a possible upswing on euro dollar. Next one is American dollar to Mexican peso. American dollar to Mexican peso is continuing the upswing after the breakout of this red resistance in 23.6. They tried to make a correction, especially yesterday after those FOMC minutes, but the buying pressure is very strong here. So sellers are struggling to test the local support. That would be more than welcomed by technical traders, right? That test of the support wouldn't be anything weird. Let me draw a trend line here. Yes, I would say that's a proper trend line in this situation. Combination of those two supports, 23.6 and this uptrend line, can be possibly a good support. Next instrument is Australian dollar to American dollar, which had absolutely beautiful bounce here on 50% Fibonacci. Also, I wouldn't be surprised if we have like correction equality pattern. Not exactly, but still very close to that. Let me delete that, not to mess with the chart. Nice bounce from the horizontal support. Then I showed you this checkpoint that the buy signal will be triggered once the price will get there, and the price got there. Broke the downtrend line and broke the horizontal resistance, and currently the sentiment is positive. Silver benefited from this dovish FOMC. Is heading higher, as we said. And that's a good resistance for now, right? Those highs from end of September, those highs from 2 days ago. In the longer term, where we can potentially go, well, that's actually a good place for a reversal. So if sellers want to think about going down, they should act now. Here, 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 here. For them, that's a place to go short. Once this 23.6% FIBO will be broken, that will trigger a buy signal. British pound to Japanese yen. That's a beautiful false breakout here, also with the checkpoint. So from false breakout to false breakout, right? We had a false breakout here. We had a false breakout here. Now this negative information. And when the price will close below, that will be a sell signal for this instrument. Dollar index. Dollar index very technical, is trading very technically after breaking this lower line of the wedge. It's going down. Now they found this support. Actually, look, FOMC was here. Now we recovered totally after this drop from FOMC. So again, that was not very significant event. It was perceived dovish, but not very, very dovish, like 52% to 48%. But it does not change the fact that the sentiment here is negative. Sentiment here is negative, and we should see after price will go higher a little bit, but eventually the price should go down. Next one is DAX, where nothing changed. So sideways trend is still present here. We are locked in a tight range between 12,000, actually 13,000, let's say, and 12,000. That's so we do have a psychological barrier as a support. I'm sorry, 12,900, right? 100 points distance between support and resistance. And gold is shining. We had a very positive sentiment on gold even before FOMC. We were telling about that for a long time. Long time. As soon as this buy signal emerged last Friday, on Monday we created a written analysis on Tuesday Trading Sniper daily analytical report, saying that we should see the price going higher, and the price was going higher. And before the FOMC, what the price was doing, the price was creating a flag. A flag is a trend continuation pattern, so those blue lines is a flag, and the flag suggested us that we should see a continuation of this movement of an upswing, and breakout of the upper line of the flag triggers a buy signal here again. So if we do have a buy signal here, where is the potential target? Well, the potential target is here. Why? Resistance, support, resistance, and here it's 38.2 Fibonacci level and 23.6. Okay, 38.2 of this upswing, and there is 23.6 of this one. That's the potential target for this movement. Actually, most probably we would get some, yes, 38.2 here. So we're not surprised that we see a bounce here. That's a potentially very good resistance. But once this resistance will be broken, that opens a way to new highs. Like after, if they're gonna break this, that will be a perfect buy signal to get here. Not here, not here, not here, but here, to $1,360 per ounce. Speaking about upswings, we have to mention Bitcoin. Right, Bitcoin. When the price was going down, we told you about the bull trap here. Bull trap is a bounce after the bubble burst, and that was a very good call from Alpari, because the price later went significantly higher. The thing is that we thought that this chart of a typical bubble will continue, and after that we should get return to normal, so an upswing, which was anticipated, but after that the price should go down, if that would be a typical bubble chart. But it is not. So instead of return to normal and then reversal, we don't see that. We see new all-time highs. So here we have rumors about China. Here we have Demon from JP Morgan. Here we have China regulations and bans on exchanges. And after that, Bitcoin recovered easily. They waited a little bit below $5,000 per one Bitcoin, and then a breakout 8% for a day today. Very successful day for Bitcoin traders. Nice breakout, the price advancing higher. And what else can we say? Well, before that, the price was creating an ascending triangle formation, and so this upswing could have been anticipated. The sentiment is positive. It's well, although it does not fit in a typical bubble chart, it is still a bubble, but it doesn't mean that you cannot trade that. The thing with trading bubble is they are perfect for trading, but you need to know when to get out of this position. So when the price is rising, you should just buy, but you have to know where you should escape, where you should close your positions. Interesting case we do have on British pound, as we said about this words from Mr. Barnier, who said that Brexit talks have reached deadlock. This caused a massive reversal on British pound, on all of the instruments with British pound. We do see a nice potential trading signal on the British pound Australian dollar. Although yesterday, maybe you remember what we said about this pair, that there's no there's no trading signal here whatsoever, because the price was exactly in the middle between those two horizontal lines, horizontal resistance and support, and the price was exactly in the middle in this symmetric triangle between lower line of the triangle and higher line of the triangle. So that actually was pretty bad place to enter with a trade, because it's 50-50 and you don't want to trade when it's 50-50. But those words from Mr. Barnier came as a gift here, because it allowed us here, this drop, to create a head and shoulder pattern with a left shoulder, head and a right shoulder. And now what we are missing here is a breakout below the neckline, but I wouldn't take this neckline, this thin line, black, but I would take this green area as a neckline. So breakout below this neckline should trigger us a sell signal. That's the best thing. The potential target is 450 pips lower. So that is pretty good trading occasion, long-term trading occasion. Next one, American dollar to Swiss franc. American dollar to Swiss franc, which had this false breakout. Here the price was going lower. We broke the uptrend line here, but this recovery after FOMC, this today's recovery after FOMC questions this false breakout. Well, so far so good. So far so good for the sellers. We still do have a sell signal here, so they shouldn't be worried. But this reversal is kind of dangerous. We do have a nice support here. Okay. It looks nice. It was looking better for the sellers when we are here. And currently it's more of a sideways trend, which is not good for trading, at least for my strategy, which focuses on trend following. But still, trading levels are pretty clear here. So after the breakout of the green area, you sell. After the breakout of the orange area here, you buy. WTI is triggered a buy signal after breaking the upper line of the flag, but fails to go higher now. I think it can be the beginning of a sideways trend. Boring sideways trend. We will see. But the fact is that the neckline is no longer here. Also, I would forget about this flag. And this head and shoulder as well. Okay, so we need to start afresh with this, and what I'm seeing would be support here, maybe different color. Okay, let it be like that, and then resistance here. So kind of a pennant and a breakout. But pennant, okay, but those horizontal lines will be the most important here. So we do have a support from here, resistance from here, and breakout of one of those two should trigger us a signal. Here you can see this reaction on British pound, which is pretty intense. Nice drop, nice waterfall on British pound to American dollar. Well, here we do have a combination of stronger dollar today and those that information from Brexit negotiations. This drop changes the situation pretty significantly. So now there is no buy signal here anymore, which was triggered after the breakout of this line and the flag, and we are back to the sell signal. Okay, that's pretty much clear. As long as we're below the red area, the sentiment is negative. American dollar to Polish zloty, that's also a power of false breakout. That was actually a great place to trade. False breakout above the pennant, but also a bounce from the horizontal resistance here. This resistance is pretty clear. Here. And look, traders saw that. That's just a huge drop. Okay, the price fell like a rock. There is this resistance here. This one, I guess it's gone, so we can adjust. And this support is in the game right now, is active. Let's say that this pennant is gone. I already showed you this false breakout. False breakout we can remove as well. This checkpoint shouldn't be used for a while. So yeah, that's pretty much the situation. I think we can also, well, should we adjust it? Yes, I think we can adjust it here. That's the situation on American dollar to Polish zloty. The rest of the instruments, Australian dollar to New Zealand dollar, that better data from Australia did not influence much, because on a hourly chart you can see that it's a painful sideways trend for the last 3 days, and we don't have a game changer here. American dollar to Russian ruble. After the defense of this 38.2, we are trying to break the lower line of the flag again. Maybe this time with a success. But no trading signal here yet. British pound to Swiss franc. I think I don't like this technical situation, so I'm gonna remove this. You have so many instruments that when you see one and you don't like this situation, nobody forces you to trade in this instrument, so you can just leave it. You can just abandon it and forget about this. Why not? You don't have to force yourself. American dollar to Canadian dollar. We broke the lower line of the flag, which triggers a sell signal. We said that the first target is this blue area. We reached this target. Now it's a time for a bounce. Sell signal is suspended as long as we stay above the blue area. Sell signal will be created once we will break this blue area. Here. Again, as long as we are above, the sell signal is suspended. Euro to British pound. That's supposed to be a nice reversal, 38.2 Fibonacci double top, but fundamental analysis came and destroyed hopes of the sellers. There is a nice horizontal resistance here, 50%, but also supported by this and this, and we will see what will happen here. American dollar to Japanese yen, that was a good one. We said that breakout of this horizontal resistance triggers buy signal, breakout of this triggers sell signal. So now we broke this and test this as a closest support. Once we will finish with a hammer here, that will be actually a buy signal on this instrument, right? So that's pretty interesting, and that's a genuine setup here. Next one. Look, that was our scenario for S&P 500 yesterday, and look what happened. We had exactly the upswing here. Sentiment is still positive. Even though we came back inside this ascending triangle, it does not change anything. The sentiment is positive. So let me wrap that up for you. Here sentiment is positive, but for the buy signal we wait for the yellow area. Sentiment positive, but it would be nice to see a pullback here and a bounce for a buy signal. Australian dollar to American dollar buy signal. Silver, I would be careful with buy signals because we are on a resistance right now. Here, breakout below should trigger a buy signal. Here, negative sentiment, but no trading signal here yet. DAX boring. Gold, potential target is a little bit higher, I would say, so still potential for an upswing. Bitcoin obviously long. Here a short position after the breakout of the support. Here short position after the breakout of the support. Oil no signal, cable no signal, no signal, no signal. No signal. Signal will be when the support will be broken. Euro to British pound, potentially a nice resistance, so watch out for a bearish price action. Euro to Japanese yen, potentially very good buying opportunity, and S&P 500 positive sentiment but no trading signal. Okay, my friends, thanks very much for watching. Now we can see increased volatility here. Regardless the data, Initial jobless claims now lower than expected. You can see a bit of few movements here. Increased volatility. So yes, guys, that's how the situation looks like. That's how the situation looks like on the market. And I hope you enjoyed our daily analytical report. And now a short break, and after that a webinar about traders psychology, trading psychology, in my opinion the most important in trading. So I hope I will see you all there, and let's stay in touch. For that, you have to follow our Twitter account and our website alpari.news. Thanks very much and goodbye.